Hello, guys. I hope you had a wonderful weekend and having a wonderful Sunday. My apologies for making this weekly Outlook video as a recording instead of a live stream. It's mainly because I missed 6 o'clock as I was outside, couldn't make it home on time, and it's already pretty late for most of you, so I decided to make it a recording instead. So here we go. Let me leave these things down. All right. So, so last week on Friday with NFP, we kind of had a range bound day in terms of like market just went from PDL, sorry here, PDL to previous day high. That's the first thing, and the second thing is the NFP low was into the breaker block here. This is a breaker block along with an order block, and there is a fair value gap there as well. So far the fair value gap is being respected. I'm definitely leaning more towards buy side. However, this could go either way too, both sides, just considering the higher time frame, like hourly for hourly consolidations. So let's take a look at the lower time frame to get a better read on this. I'm definitely favoring, like, because the thing is, I am, as at the moment at least, I'm seeing these two down close candles as an order block. However, the question I don't have, the answer that I don't have is basically, I don't know if it's gonna form or print one more down close candle here to make it like 3 or 4 consecutive down close candles. Though I'm favoring immediate expansion towards buy side and all-time highs basically. I want to see the daily just, hold on, the daily just staying as IFD here. So I don't want to see the sell side being digged furthermore. Although, or also, what could happen is if it goes for the sell side, tries to reach or tries to have a pullback or a deeper pullback, what we're gonna have is probably we're going to be getting down into this BPR here. That'll be the deep pullback here, all the way down here. Then it could form, or it'll form a buy model, which is not what I'm favoring though. It's just a scenario that I have in mind if it keeps going for the sell side. So if it takes out Friday's low, I think we're looking for a deep pullback. So let's go down to the 4-hourly chart. Let me pull up ES2. So I want to establish a potential dealing range, which we don't have on the 4-hourly apparently. Yeah, there's no SMT at the highs, no SMT at the lows. So far, there's nothing much on the 4-hourly. What I'm thinking is though, by looking at the 4-hourly, so we have the accumulation fair value gap here, IFED fair value gap, it's holding so far. It's the same deal on ES. This is the accumulation fair value gap, IFED fair value gap, it's holding so far. Now, the only thing could happen in these cases is, so ES is weaker, right? The wick is way down. It touched all the way down to the lower fair value gap's low, whereas Nasdaq just bounced off of its CE basically. So what I'm thinking is, if it goes for the sell side one more time, which it could technically speaking, we should be having a divergence here. ES not taking out low, staying maybe at the CE of the wick, and then rally is what we could also see potentially. But this is, again, this would be just a deep pullback. I don't favor this. It's just a scenario that I am open-minded to, because this week is pretty heavy. We have CPI and FOMC at the same on the same day, so I'm expecting very large range, especially on Wednesday. So be mindful and don't trade CPI, please. Let's go down to 1 hour. Let's see if we can get can establish a dealing range here maybe. There's no divergence there, no divergence here. There's no divergence here on this time frame. Alright, no divergence on the hourly, so we don't have it. We have a divergence from Friday though, here. There. So technically speaking, this should deliver buy side. Looking at the hourly, coming from the 4-hourly IFET basically. I'm having a hard time establishing a specific level though on every time frame. So let me go down to 15 as well. Perhaps we could get something on this time frame. So you see Nasdaq is failing to make lower lows also. Something worth mentioning. So let's see these lows. We might have a divergence here on this time frame. Alright, so the divergence is all the way down here. This level could help me potentially to establish a dealing range. Let me check these lows too though, just in case if I'm missing anything. Okay, there's nothing there. There's a divergence up here, so I'm gonna annotate that instead. Right there. Let's take a look at the dealing range from that low. So yeah, the EQ was touched. That's healthy. And on ES, the EQ was touched as well. And it's respecting the range EQ so far. Formed the first divergence, bullish divergence. So technically, we should be taking out the short-term buy side, which is Friday's high. And then it should keep going further, just thinking about how the daily is looking. Now, I don't know how much can it go. I guess we'll just learn along the way. So short-term buy side should be the drawn liquidity. I mean, there is just one rule of this though, because I'm looking prior to the overnight session. The only rule I'll have for this idea is if the overnight session doesn't violate the bullish SMT divergence at these lows here, we're looking for the Friday's high. If it violates the high, violates the short-term divergence or the SMT divergence at the lows, then this idea is invalid basically. So it's pretty straightforward if you ask me. Easy invalidation. So if it rates the low at 215, Friday's low, and we're looking for something, we'll have a different narrative. But so far it's looking good for the buy side. And ES, it seems like there is a trap here as well. Right here. Along with the SMT divergence. Now it gap down. I think that gap should hold as well. So make sure to annotate the gap. Make sure to have that on the chart because it's going to be very defining early in the week. Let me annotate this real quick. That is very important. So the overnight session has to hold above the bullish SMT divergence because the divergence also technically completed its objective, which is the short-term buy side, which is right here. Took that high. Oh, that's the open. On ES, it did not yet, so I'm expecting it to push further more. Just be mindful. And take a screenshot of this to share it on the. Also, one more thing to note here is at the highs, there's no bearish divergence, so it has not yet, or trap or whatever. So it hasn't formed a reversal just yet. Okay. Now on the 1 minute though, this is what I want. It's kind of go. This is kind of like going against the grain, but like the lows that fucked me up on Friday, clean lows, could get tagged. Not gonna lie. It could get tagged. Looking at the 1 minute look, seems like it's reaching for it, which means the SMT averages on the 15 gets violated. So we'll see. It could turtle soup that low though. Turtle soup that low and rally could happen, but I don't want to see both assets tagging those lows. So I want to see maybe ES staying above if NQ goes for it, you know. So keep that low on your charts. It's 9:34 Fridays clean lows. This is the 15-minute SMT averages. But again, on the higher time frame, I want to have a bullish order block. So that means on Monday or Tuesday, without digging towards the sell side, I want to see the down close candles getting violated. So I want to see a big green candle above the potential order block high here, which is all-time high at the end of the day. So yeah. All right. Let's see how this goes. I'm as curious as you guys are. By looking at the one though, I think it's in sound model for these lows. So here, left equal highs, which is gonna get targeted. Break down, broke down, never tagged below, pulled back, and not pulled back, there's a S&T divergence left on Friday, and delivered the short-term sell side, kind of fell short for like 1-2 ticks, pulled back higher. Here, there's another divergence, I believe. Let's take a look at it, yes. So this is the first divergence from Friday. Broke down and pulled back. And here, as you can see, Nasdaq made a higher high. ES made equals, or not even equals. I think it made a lower high. And try to dig one more time. So ES completed the sell model here. Let's tag the short-term low. NQ didn't. So let's see. For me, although I don't want to see the 50-minute divergence getting violated, I think if it rallies below this low on the 1 minute, that will be healthy, in my opinion. Let's see what overnight does. Also, let me take a look at the calendar to have a better narrative. I think it's going to be a pretty heavy week. All right. So what we have is there's no news on Monday. Skip this day if you can. Tuesday afternoon bond auction. No red folder. Skip this day if possible as well. So Wednesday is pretty heavy. On Wednesday, 8:30 CPI, which is a big number, moves the market a lot, brings volatility. And then at 2 o'clock, same day, there's FOMC. So on FOMC days, traditionally the morning session is, small range bound market, but because there's CPI, might be a different story. So probably after CPI delivery, it could form a setup one more time in the morning session, and that should be it until FOMC delivery. So at 2:30, 3 o'clock. Pretty heavy day. Thursday, there's PPI, and bond auctions again. Thursday should be a good day to trade, and Friday, 10 o'clock, consumer sentiment. So yeah, if you can, again, skip Monday, Tuesday. Try to scalp on Wednesday, just to scalp though. Do not have high uh, high targets, high expectations, and do not try to catch home runs. I think one shot, one kill, low hanging fruit objective should be possible. That should be the way to go for Wednesday morning session. And Wednesday afternoon, because of the FOMC, the focus should be 2:45, 3 o'clock ish. You can get another setup there. So yeah. So let's take a look at, I'm gonna switch to my regular layout. Gonna quickly look at Forex and crude oil. Actually, let's start with crude oil. Hold on, where's my annotations? Where's my annotations? 1 second, guys. I don't know where my annotations are. Maybe it's the other layout. Let's see if it's this one. Oh yeah, it's on here. So last week I was like, okay, because it respected the daily fair value gap so good, I was like, okay, this should definitely break below the range EQ, which it did. And I was mentioning like it should form or displace below it, and we have it here. So this is the range EQ. I think the target for crude oil should be maybe like short-term bullish into range EQ if it could reach there, and then towards $66 per barrel. So this looks pretty good. Should be a good week for crude in my opinion because it's moving. Let's take a screenshot of that. Let's take a look at gold. Gold is also following the S&T lows. This is S&T high, dealing range, range EQ. Now it was broken as of this week. Now it should short term pull back into range EQ to deliver 2,194, which is the daily sell side objective. It just completed. It seems like it's gonna set up for the second leg on the daily. Let's take a look at silver. So as you can see, silver has not delivered the short-term sell side. It should keep up the pace. Break below the range EQ. Let's see, break below the range EQ displays, retest, and tag the drawn liquidity, and form a buy model from there on potentially. So let's take a look at DXY. I think nothing has changed with DXY and Euro USD GU. Let's see. All right, let's see. Wow, the XY is actually, it's rallied on Friday. That's interesting. Left equal lows of the CE of this wick. Now engineered liquidity. So what I'm thinking is, I think it could tap into the inversion pair, the trap fair value gap one more time to go for the sell side. I think that could be the case, but the reaction is massive. I just don't like the lows being left like that. So because this is engineered liquidity now, it should get tagged after buy side delivery. This is engineered liquidity. There's also trap there though. This is kind of interesting. So what I'm gonna say here is, here is the first scenario. The second scenario is it's gonna take out the buy side here, okay? That's inevitable. But afterwards, if it uses the breaker to stay above, something like this, an accumulation above the breaker, I think we're looking for buy-side delivery towards the old original consolidation. But if it expands towards the trap fair value gap and rejects it right away and comes within this breaker, I think we are looking for downside delivery on DXY. So let's take a look at Euro. Wow, this is so interesting. Oh, let me look at GU. There is a divergence at the hot. No divergence. It's a very interesting gap. Very interesting. Violated the S&T divergence after taking out the short-term buy side. This looks very suspicious. This looks very suspicious, yes. Because this means second stage is failing. Because the S&T divergence was tagged. It means it's failing. And if it's failing, what we're looking at is, unfortunately, the S&T, the SMR. So GU, still holding above. The S&T divergence objective was completed though. Staying here. So yeah, if, like I said, if DXY could push, we're looking for SMR trap shorts low here as a draw on liquidity. But yeah, that's the Forex looks interesting. But anyways, guys, thanks for listening me on this session. I'll be uploading this shortly, and I'm leaving the calendar and my thoughts about it. I'm trying to build a schedule real quick. But yeah, I'll see you guys tomorrow.